a dull environment where we saw a global slump in the IPOs, which is initial public offerings in the year 2016 all over the world actually. India was surprisingly a standout performer according to Ernst & Young's recent IPO report that came out. And that's not all. India will continue to dominate the charts as well as we go into the year 2017. And of course, the biggest news of 2017 as far as India is concerned will be the NSE IPO, which is coming out, and they have filed the draft red herring prospectus as well. One of the biggest in the past 6 years, raising 10,000 crore odd rupees from the market as well. So the Indian IPO market really looks strong. Let's take a look at what's contributing to the Indian IPO market outshining its peers.
Globally, the number of IPOs in 2016 fell to 1,055, with a 16% drop on a year-on-year basis to $132.5 billion. India, on the backdrop of this, outshine and saw a 38% jump in deal volume and 79% uptick in proceeds raised on the back of a pro-business-led political regime. On the Indian bourses, 83 IPOs raised $3.8 billion, which equals to 25,800 crore Indian rupees, according to Ernst & Young. The Indian stock market was ranked as the 7th most active in the world in terms of IPO activity as it hit a 6-year high. The ones that stood out of the pack were ICICI Prudential Life Insurance, PNB Housing Finance, EQUITAS Holdings and Loris Labs. The goods and services tax regime will add fuel to this momentum going forward. The report marked how India could remain the highlight of IPO activity globally even in the year 2017. The reason for this momentum in IPO activity in India can be attributed to a political regime that is conducive to business, upbeat economic sentiment, and easing inflationary pressure. India's IPO pipeline for the year 2017 looks stellar. The government's divestment plans to revive the PSUs strategically enhance the market activity further. Chaiti Narula for WION.